Should you buy KB Homes stock? Let's talk about it. So depending on where you're at in the United States, KB Homes is a national publicly traded builder. The ticker symbol for this stock is KBH. How have builders been doing primarily for the last 1 year? So with KB Homes, like most of its other predecessors like Pulte Homes, Toll Brothers, which is a luxury builder, and D.R. Horton, which is a more economical builder, they're all trading at all-time highs. As of today's trading, KB Homes was going to present earnings, and it is at all-time highs, 52-week highs, trading at $63. However, if you see over here in the after-hours trading, it just reported earnings. So for many people out there that were looking at even making an investment in builder stocks, perhaps KB Homes, I, for one, look at the RSI as well as the 52-week on the trading, and I never buy stocks at 52-week highs, and I don't buy stocks with RSIs that are showing way overbought categories, whether it's 6 weeks, 3 months, 6 months trading ranges. So the issue with this earnings call, KB Homes did present pretty good numbers. The problem that they're showing, the reason they're down right now, just like Lennar when they were down in their earnings report, and again, why people are buying it right back up, it's very confusing to me, mainly because of the dividend increasing today. Anyhow, back to KB Homes. The problem is their book to value, the margins are compressing. They're going down. Why? It's because interest rates are way too high right now. If you're going to go buy a house right now, for the last quarter, they were well above 6.5%, near 7%. At one time, they were touching 8%. So the only reason people were actually buying homes, you're probably like, well, how are builder stocks even at 52-week highs, Matthew? Because there was no competition. If you were to sell your home right now, buyers would have to take out a loan at 8%, 7%. That is extremely unaffordable. So the way the builders got away with it is they got a free ticket, which was a tailwind to them. They had no competition because they had the ability to buy down mortgages. Well, you would say, well, can't sellers in the resale market do that? Yeah, but builders had a much higher margin, so they could give a heck of a lot more back to buyers with concessions. If you've ever bought a home, most builders, they have a title company, they have a home loan company, they have the build, and they even have insurance. So they want to make as much money on every angle as they can in a transaction. So when you can actually originate the loan, you can cut your loan margins down to help that buyer to protect the integrity of your list price on your new bills. So with KB Homes, basically they were cutting a lot of their margin out for these concessions on these 2-1, 3-1 buy downs to help the buyers have a temporary interest rate drop, and basically forecasting that rates would drop in the future. So that is the way builders have been selling a lot more homes over resale. So what do I project for the future? I think for the majority of people who are looking at making an investment in builders, in particular KB Homes or D.R. Horton, who's going to report here soon, my whole thing is what was once a tailwind cannot be, you can't have your cake and eat it too. With rates going down, everybody goes, oh, the builders are going to do awesome. Think about it for a moment. Just conceptualize with me. I am a realtor, so let me just share this with you. As the rates go down, more and more sellers are going to come onto the market because now they don't want to sell their home to go into an 8 or 7% mortgage, but let's just say the mortgage is at 6 and they could buy it down or whatever that looks like to maybe upper 5. So that's more tolerable. And plus they have a lot of equity, so they'll just put more down to stomach that higher interest rate. So more inventory will come on. So what does that look like if I'm a builder? It's not all rosy for me because now I have more competition. So that tailwind of interest rates dropping is actually become a headwind because now there's more inventory and there's more increased competition from the resale market. So if I'm looking at buying KB Homes right now, I've really got to think about this. My margins are going down and now I'm going to have increased competition with more inventory coming on and resale having a fairer fight to come off the market before I can sell this new home or spec home. So am I a buyer of KB Home right now? At this time, I am not a buyer of builders. Actually, if we looked at the charts and the technical analysis of these builders and their historical PE multiples, they're all trading at tippy-toppy levels. And the whole thing with where the whole markets are at, if you're going to have multiple expansion, and that is the only way for stock prices to go up, you have to have earnings expansion. And when the builders like KB Horton are reporting margins dropping, that's not earnings expansion, that's earnings contraction. So I think it's only a matter of time as unemployment rises that these builder stocks are probably on the way down. So in short, I'm probably a seller. As you've seen from my earlier videos, I am short and I will wait this one out. for quite some time. It's only a matter of time till these stocks start to actually recognize there's a lot more competition, and margins are probably going to keep falling, as noted in this earnings report, with margins dropping just over 4.5%. Let's see what D.R. Horton has to represent. But for KB Homes, I'm out. I'm a seller.